Okay, so Ruben, for those that don't know you, because this is being televised everywhere, uh, you know, can you share a little bit of your time in this industry? Because I know, just like me, you went through the emotional toll. There was 9/11 and the impact they had in our industry, and then your industry was more decimated than mine during the 2008 2009 crisis. And I want everybody that's listening to me to understand, that both experiences that we went through, it's not that we're saying that it's going to be the same going forward, but having been through those situations sort of prepares you a little. So Ruben, like I said, I know you went through both of those, just like me. So if you can share a little bit, how were your experiences at that time, and what do you see differently now?
Well, we're in the middle of it right now, so it's hard to really project or have a crystal ball to see, how long and how bad or how good this is gonna go. But experience teaches us that we will come back. I'll go back to Hurricane Andrew, that decimated South Dade, and it was a rough, like you and I spoke about, month there in September and October. But by Christmas time, which was just a few months later, we were back in business, kind of busier than ever to some degree, because like everything else, it doesn't happen in a vacuum. So while it decimated a lot of the homes, it did, give us a lot of money. I don't know if you remember San Andrew,
Yeah.
which was when all the insurance checks started coming in and really started getting the economy going. And there was obviously a situation we had less inventory to sell at that point, because a lot of them had been damaged. But we got through it. That was only a few months. Again, with 9/11, it was difficult. I remember for a short time, people said they didn't want to buy in the higher level units, so they wanted to be on a lower floor to be able to get out quicker. So, we all go through this. This country is the number one economy in the world for many, many years. What we're going through now is, again, they're all different. Nobody has a crystal ball and can tell you what can happen. We're staying relatively busy. The GSEs, which is Fannie Mae and Freddie Mac, bought about $80 billion worth of mortgage-backed securities on Monday, which create a lot of liquidity. So on the standard loans that we do on a daily basis, conventional FHA, VA, we're writing business as usual. Rates are still low. They did pop up from the real lows about 2.5 weeks ago, but they're still extremely affordable. And once we get past this, we're ready to rock and roll.
So then, what I'm hearing from Ruben out of that story is that those three, Andrew, September 11th, and the correction, were experiences that we went through, and the economy went through, and the market went through. The difference right now is that we went through those as in, maybe as not as much as part of it. I mean, me and Ruben both lived in South Miami-Dade, so we lived through the storm. September 11, we were not there as individuals, but we felt it because we saw it, and we all knew somebody that was affected to it. And the 2008-2009 crisis, where was something that affected literally everybody. But touching on what Ruben said, we are now in the middle of the hurricane still. A lot of you have been contacting me, and please keep reaching out to me. I don't mind talking to you, talking to your clients. Conversation I was having with somebody on the way into the office today was, what do I see? I said, listen, the problem is that right now we're still in the middle of the freezing point. The market is semi-frozen right now. So it's hard to tell where we're gonna go from here, but we gotta wait until we get past these next 15 days to see where we're gonna be at. There's a couple of things that I want everybody listening to me to do and take advantage of, because it's tools that are being given to everybody, and I'm not gonna get into politics or party this or party that, but I want you to take advantage of certain things. Fannie Mae Fannie and Freddie are relaxing the bank's guidelines, so they're gonna let most institutions give you a forbearance agreement in your mortgage. So if you're listening to me and you have a mortgage in place, when this is over, call your servicer, ask if that is in place. You want to preserve cash to go forward. So reach out to your servicer and find out what is the agreement in place, because this forbearance package, it'll be monumental to a lot of people. It will give you some liquidity in your pockets to get through the next 30, 60, 90 days until things come around. So if you're listening to me, you only take one thing away from today's presentation, it's that. It's it's focus on surviving this and saving cash. And like Ruben said, we're a very resilient people. We're a resilient country. If you watch the news late last night, there was was it, Ruben, a 2 trillion that was passed in package?
Correct.
So a 2 trillion package that was passed out, and that's going to be used in different scenarios to preserve employment, to preserve the economy. And that is not the last tool in the toolbox. For those that are following, all of that, this is the first of probably 2 or 3 packages that will be rolled out over the next 90 days. And I know that some people are, panicking about, oh my God, what's going to happen with inflation and all of this and all of that. I'm not a believer in that. I think that, and I don't think this is a bailout to anybody. This is something that is happening not to your own fault, to your own demise. The 2008, 2009 crisis happened to certain people because they overextended themselves, they overextended their credit. There were a lot of relaxation on lending guidelines. So that was different. Right now, the situation that we're all in as a planet, it's not because of anybody's fault in particular. So I think that the government coming in to save the day is something they had to do, because that's what we have the government for. What's your take on that, Ruben?
So I just kind of want to hit on the forbearance agreement. We've been getting a lot of calls on that, and I can just give you my opinion on this. It's probably going to happen, probably sooner than later. And forbearance, just for you guys, so you guys know, is basically when they allow you to miss a certain amount of mortgage payments. My opinion on that, and my suggestion to you is, obviously, if you've lost income and you need it to get through, obviously, if you need it, you got to take advantage of it. However, if you don't need it, if for some reason you can continue making your mortgage payments, that my suggestion would be to always continue making your mortgage payments going forward. Now, if you do decide to take the forbearance, consider it almost somewhat of a full-time job. Make sure you stay on the servicer constantly. Make sure that they are not reporting you late to the credit bureaus, and make sure that you know exactly when those payments are, better said, or the interest payments are going to come due. We've seen this happen before, and I just want to make sure that people understand the seriousness of a forbearance. It is almost like, to some degree, a renegotiation of a mortgage. So don't just say, oh, so-and-so gave me a forbearance, we're good to go, I don't have to make my 3 mortgage payments, the economy is doing better, and I'm going to go to Disney World, for 3 weeks. No, this is not what this is about. You got to take this very seriously. And if you do decide to take it, read the fine print and make sure it works for you and your family. Ernesto, we lost.
No, there was there's a misconnection there. So what Ruben is saying is true. From what I've been reading, this forbearance agreements are gonna be, it's literally extending your mortgage by 6 months or a year. It's not a forgiveness of payment, because you're taking that chunk of payments and moving it to the back. If it's gonna alleviate the pain in your household, take advantage of it. Don't let it go, because it's something that you should, if it's gonna alleviate the pain in your family, don't let your family go through pain. Take advantage of it. From what I read, the services are not allowed to report the forbearance agreements are negative in your credit, but you should follow up every 30 days, like Ruben is suggesting. Greater than that, it's not that it's gonna happen automatically. So if you don't pick up the phone and call your services, fill out the form and send it back to them and they approve it, you cannot stop your payments. So I want you to listen to me. If you are asking for a forbearance, there's paperwork you gotta fill out, submit, and get back approved. It's not stop your payments. But now that I touched on that,
So
a lot of the questions I'm getting from
everybody, make sure you make your April payment.
yes.
Hello, gentlemen.
This is not in place yet. I
Right.
think this is part of what happened, got passed last night, but until that cash gets distributed, make sure you make your April payment. So you ask for a forbearance when you are up to date in your payments, not that you're behind in your payments. Now, Ruben, a lot of the questions I'm getting, and it touches back on this forbearance thing, is that everybody's saying, oh my God, there's going to be a monumental amount of foreclosures. The wave is going to be bigger than 2009, 2010 foreclosure wave. With this forbearance that from what I just finished reading, it could take up to a year off the pay. Everybody can take a year off payments. I don't see a foreclosure wave. I think people are going to have the opportunity to sell if they want to sell, and not be able to just stop paying their house. Even if unemployment kicks in, and trust me that the unemployment numbers are going to go up, but even if unemployment kicks in, Ruben, I think everybody has a lot of liquidity in their homes. I think that a lot of people are going to tap into that liquidity, reaching out to you. But what's your take on the REO business booming versus if it does boom, it may be 2 years from now? What's
Can you guys hear me?
I think we talked about
yes,
this
we can
last.
hear you. We can hear you, Joaquin.
Okay,
We can't see you, but we can hear you.
that's better.
We talked we talked about this last time, but yeah, the craziness that happened back in the great recession of a few years ago was a lot of it had to do with underwriting, and it's just a different situation we're in right now. Majority of people are not overextended with 5-6 properties that are vacant. Majority of people are just trying to make do with their primary residence. So I think that's going to help a lot the numbers. I don't see a huge tsunami of foreclosures happening just because of what's going on or what's happened with the tighter underwriting guidelines that we've had for the last 10, 15 years. So that is the main reason. South Florida, we talked about this before. We've had an inventory issue. We've had, a lack of new construction. So I still think that numbers-wise, like you say, we're going to see unemployment go up. We may see foreclosures tick up, but as far as a tsunami, no, I don't see that happening. Again, nobody has a crystal ball, but in my opinion, the lack of inventory that we've been dealing with, and it's been a couple of years now with lack of inventory. It's not like something that just happened last quarter. So that, along the fact that the underwriting guidelines that have been in place have been really good on mortgages. Remember, it's only a foreclosure if you don't pay your mortgage. Obviously you have to pay your tax and insurance also, from most of your taxes. But, most people are in a much better shape than they were, in this time, 2007, 2008, 2009.
Yeah. So one of the questions, so everybody watching, because at this moment, there's over 100 of you watching, there is a question and answer function at the bottom of your screen. One of the questions that's being asked is, if I have to pay it afterwards, am I going to have to pay interest on that forbearance? Ruben, my take is yes. I don't know if you have heard anything on that.
No, we haven't heard anything. And last time we had a situation like this, every servicer was different. I'm not certain it's going to be that way now. I haven't really read the bill they passed last night at 2 a.m. But
Really?
I think you have to get.
What were you doing?
At 2 a.m. I was sleeping. Yeah, I think you're going to have to get with your servicer and ask them exactly what the details of the transaction are. Are they going to charge you interest? More than likely they are. I mean, I'm not sure they charge you any additional interest, but you will be charged the interest portion of what you owe. But again, we don't have those answers yet, but they need to come from your servicer. That's why I said from the beginning, if you go down this road, you need to take it seriously and make a great decision for you and your family. But make sure you get all of the details of it, the fine print, as they say.
Joaquin, what were you going to throw in on that one, on the REO possible, everybody's speculating on REO flooding the market again? And
no, what I wanted to add to this was that a lot of the people that are listening to this, a lot of the agents, if not a good amount of them, do not own a property at the moment. So they might not see why this information is important to them, but they will be asked these questions, and they really need to be listening to both of you, explain the intricacies of what took place, because if they get asked and they don't have an answer, they don't have a solution, they're going to lose an opportunity for business, whether it's a buyer or a seller or somebody who in the future is going to sell currently, living in their home. This is the moment where you capture their trust. So I really think that everybody should be listening to what Ruben and you are saying about this so that they can use it.
Yeah. So going back to what Joaquin just said, one of my notes to everybody watching of what to do to stay in business, I have it as double down on your leads. All of you have a pipeline of leads that you've been working with, and this information is information for you to not to just keep, but to share with anybody that is a lead of yours, because it's a good opportunity to call, ask how they were doing, and say, hey, I'm going to pass some information just in case you want to share that with anybody else. So if someone was asking about that, about interest. So in a $300,000 mortgage, Ruben, you're talking about what? About $800 in interest a month. So you're adding an extra $10,000 to your mortgage.
Again, it depends on where you are in your amortization schedule, right? So if you just got the loan, it'll be more. If you're further down the process, it might be a little less. But again, this is something that you really, just take it seriously. Get with your servicer and make sure you get every little detail of that transaction. It's not quite a renegotiation. It's not a new loan, but there will be details of the transaction once you do get this forbearance going.
Yeah. So then everybody listening, going back to what Joaquin said, double down on those leads you have, those leads you've been talking to, either buyers or sellers. I mean, if we are sitting at home, what you should be doing, this is the moment to call, text, or email, and I'm going to give you some tips on emails or things you can send. And this is the information you want to pass down. Ruben, one of the questions that came in is regarding some of the, lenders not having liquidity to close loans at the moment. What's your take on that? Why is that taking place? And for those listening, it's not Fannie Freddie loans. It's it's the loans that are outside the box. So it's not as a liquidity problems and loans are not going to fund. So don't panic. If you want to text me later, we can talk about it later. You can call Ruben later. So if you can elaborate on that a little without panicking everybody.
So just so you guys know, about 95% or 97% of all loans we do are Fannie Freddie Ginnie loans. So there is no liquidity problem with that. So all the loans are going through. There's no problem with funding. We closed loans yesterday. We're going to close loans today. So everything is fine. There have been some liquidity issue with some of the out-of-the-box loans, like Ernesto said. The reasons are very, very detailed and complicated. It's almost a class situation. So if you want to call, like he said, Ernesto or myself, I can give you more details on it. But it's you shouldn't be worried about lack of liquidity right now. We have the programs out there that we always have. The conventional, the FHA, the VA, they're all available. They're all liquid. They have great rates, by the way, still, although they did go up. It's still a great time to refinance right now. Everything is, while a little higher on the rates than we were maybe a week and a half ago, it's still a good time. Your borrower, your like Joaquin said, if you're going to be an expert to some of these people, it may be a good recommendation to refi. They can save a month or two of payments. So there's many different reasons to get in touch with your mortgage rep right now and have a discussion of your pipeline. Who do you have coming up? Is it a time to work on credit? Is it a time to get them ready to buy in 6 months, 3 months, 1 month, not knowing what's happening? But I think the reality is that the liquidity is there. There's nothing to worry about at the current time. The government bought $800, I believe, billion worth of mortgage-backed securities on Monday, and they have promised to continue buying it. So Fannie, Freddie, and Ginnie are going nowhere.
Okay. Questions are where do you see rates and let's say June, July, August?
Well,
from what I read online, it's saying FHA will be in the 3s. If you look at some other lenders are saying that it will be at 2.5 to 2.7. and then, you know, conventionals, and then, you know, closer to 4.
Mhm.
I am not that avant-garde. I think for banks to survive and services to survive and the industry to survive, we're gonna have to be at north of 3. I don't see a business model functioning under 3. Uh, but you said you run a large division of a national company, and I know you have privy to a lot of interesting conversations. So what can you tell the 100+ people listening to you right now?
I don't know. I don't know is the answer, but you know exactly what Ernesto is true. I mean, we're hearing different things. You know, we'll see what happens, like he said, in the next 15 days on rates. The Fed continues lowering the rates on the Fed fund rate, and while that doesn't have a direct line to mortgage rates, it does affect overall sentiment in the market. So I don't expect to see a spike in rates. There is a minimum rate. There is a minimum rate that servicers and lenders need to have to make money. Nobody's going to make a loan where they're losing money, and that's the bottom line. So keep that in mind. You know, somewhere where we're at right now seems to be where we're going to be. You know, this is not about trying to figure out the market. You know, you're never going to buy a stock at the lowest price and sell at the highest price, right? Same thing with interest rates. You know, if the person needs to buy a home, let's take it down a notch. We're not Wall Street, like you said. The American economy is not the Dow Jones. It's mom and pop, and it's people getting into houses because they want to put their child in a certain school district, correct? I mean, that is the driving force of your business and our business. So the fact that we're lending them the money to buy this property, to educate their child, or whatever that house is going to bring them, that is what we need to think about. The rates are going to be good. The liquidity is there. And if it's time, when it's time to start buying homes, we will be there to lend the money. There's no need to start becoming
we're sitting here, being such a interesting time in our lifetimes, Ruben. The 3 month for the first time in history has gone negative.
Mm-hmm.
You know, and I had somebody ask me before this happened. I never thought I would see this happen. Does that mean that I have to pay the bank for them to hold my money? And my answer was, you're already paying the bank to hold your money.
You are.
I don't know if you have noticed that, but yeah, as we're sitting here right now, the 3 month has gone negative.
Yeah. The 10-year, I'm actually looking at it right now myself. 10 years down too. But again, us on this call are not sitting at the New York Stock Exchange. You know, these are numbers that are very interesting and can explain a lot what we do, and it's important to know how these numbers play out. But I go back to my point. It's still about putting John and Mary into a house. It's still about the school district, and it's still about getting them an interest rate that's affordable and on a loan that's going to close. And I think that we need to start thinking like that. It's really about, you know, back to basics. And I'm sure Joaquin will talk more about that. Of course, now that I'm working from home, they decided to come cut the grass right now.
Well, that guy, that's a lead. That guy's working.
That's right. He's got a pay stub coming in 2 weeks, right? But yeah, the reality is that. I mean, and Joaquin, you tell me how you feel about that. But I can't. You know, we can't be. We're not soothsayers. We don't have a crystal ball, and we're not, you know, hedge fund or money market managers. We are realtors and loan officers, and at the end of the day, we are here to service our clients, so they come back to us every 5, 6, 7 years when they buy a house. So it's taking care of that client. You got to know how it works, but you know, again, think about school districts, think about farming in your area. That's what I would focus on now, not so much this.
Well, one of the things that I've learned over the years from going through a bunch of these, and you rattled them off, and I'm sure there are a couple of other like little dips in the market that we've all suffered together. But one of the things that you have to focus on is working right now. Whenever this market dips like this, or the market dips like this, I look to talk to teachers, policemen, firemen, people who are consistently working, that their jobs are not in danger, and that also have extra benefits when they buy.
Oh, absolutely. Absolutely. And, you know, we also, programs are starting to be talked about, like Ernesto mentioned, the forbearance programs coming out. We are going to see more and more programs come out. we're already seeing on purchases, Fannie and Freddie have relaxed their requirements on appraisals. So if you take a new contract now, don't be surprised if the appraisal is only a drive-by appraisal. They relaxed the guidelines. I mean, not the guidelines. So they relaxed the rules regarding closings. They regard the rules as far as VOE. So, you know, we're trying to keep up with the market. And I got to be honest, I'm pretty proud of the industry and how quickly it's moved to make sure there's liquidity, to make sure that we're moving towards programs to help people. You know, this is not a finger pointing situation. This was not a financial crisis. It was a health crisis that turned into a financial situation. So I think that's, you know, we're doing a great job as an industry, you know, getting out in front of it. And while we're still, you know, stuck at the house for maybe a week or two more, we'll be ready. We'll be ready when the doors open up and the country gets back to work to put people back in homes.
Yeah.
You know, anybody who's attended one of your classes, Ruben, I don't know if you shared this with every class because I haven't been to all of them. I enjoy your classes, but I don't overdo it. You talked about drive-by appraisals coming in the future, and I think they're going to grab this opportunity to test it, I guess, and implement it. I don't remember if you had said it was already being done, but here you are.
Yeah. I mean, it's the reality of what's happening with technology. I mean, look at us. We're having a meeting, you know, through technology. So the same thing will happen with appraisals. I mean, Ernesto and I talked a little bit about, you know, how that affects the contract, the FAR bar contract, you know, and that's more on you guys, not me. But the reality is, yeah, we're seeing a definite change on the appraisal business. I mean, nobody wants an appraiser coming in their house right now, and the appraiser doesn't want to go inside anybody's house right now. So
Yeah.
I think it's a great change they made. I mean, the appraiser still goes out, gets an idea of how the house looks like. In general, if the house looks good on the outside, more than likely it's good on the outside. In general, if the house doesn't look great on the outside, maybe it doesn't look so good on the inside, kind of thing. And they'll go with what they got. And I'm sure if we have an issue, so if the public records is incorrect, in other words, the square footage on the property is much higher, much bigger than what public record says, you know, I'm sure there'll be a moment to make that change. And if the appraiser does have to finally make an interior inspection, we'll deal with that in a week or two when we're able to do that.
So let me ask you.
I looked up, Ruben, to what are the new guidelines. So they're going to be reaching out to you guys, to realtors, to the listing agent. You know, if there's no drive-by, if it's a 15% down or 15% equity in a refi. That they're going to do desktop underwriting only. They're going to look at the previous appraiser and, you know, just reading from Fannie and Freddie's statement from the 23rd. So if it's a 15% down payment or 15% equity left on the property in a refi, they're just going to use their internal valuation software, look at last appraisal whenever it was done, and run with it, which is huge. You know, because that's going to speed. You got to think of. It's not just, oh, wow, you know, it's probably going to bring down the cost. Don't you think, Ruben, on appraisals?
Well, and again, like Joaquin said, we were already on our way here. And it's funny, a lot of what's happening technology-wise, that we're seeing how quickly we're able to adapt to work from home. I think Joaquin's 100% on this. This may actually speed the process of us getting to where we're already heading to anywhere, which was a lot less in-person appraisals, where technology can do a lot of the work. There's geolocating, where there's talk about all just needing a picture of the interior that maybe even the realtor or the borrower can take themselves, because through geolocating with the picture, they can know where your cell phone is. So this, like Joaquin said, you know, he couldn't have said any better. It may just make this happen quicker.
Okay. All right, so I got questions that I'm going to answer, and I'll let you guys jump in. The number one question I see is, our price is going to drop. So price is it's a result of market and inventory, right? So what you gotta look at is if whoever watched the webinar I did with Dr. Ted Jones, the economist, last week, and if you didn't, it's on this page saved. It's on YouTube, or send me an email. I'll send it to you. I just got the presentation from him to share with everybody. So we're heading into this health crisis that's becoming an economic situation. on a very strong, very, very strong economy and real estate market, right? Unlike 2008 and 9, some of us in 2006 were already saying, hey, this is going to get interesting. And a lot of people were telling me, no, no, no. And I said, listen, this is about to get very interesting very soon. We had a gradual drop, right? And then, we went through the soft patch. Here, it's been a 30-day from hot to nothing at the moment. So there are going to be some sellers that are going to want to not take a risk and liquidate. And the contracts we've seen coming across in the past 4 days are very aggressively priced contracts and getting executed. So but it's going to be an overall, it depends how we walk out of this in 2 months, to say if there's going to be a price drop. And like I said, finishing before, the REO market, it's not gonna, if you're expecting that August 1st, you're gonna look into the MLS and there's gonna be half of it REOs, it's not gonna happen. First of all, you gotta remember that the legal process for a foreclosure, it takes 6 months for a bank to file foreclosure, right? And then it's gonna take another 6 months to a year for the bank to actually take possession. So whoever stops paying now, that property is not going to be listed until December 2021. So there's not going to be an REO pipeline coming into this. So I don't see. I can have the crystal ball to you. Prices are not going to drop. I think prices are not going to increase. They're going to remain the same. And there'll be here and there pockets where people are gonna not want to go through the system and they're going to just want to liquidate. And I'll let both of you jump into that one.
I handled a few calls this week with agents that were upset because the buyers were trying to either delay the closing, but they were investors. And to me, it was just them playing around to see if they were going to be able to pick up the same property cheaper a month from now. And I told the agents that if they put their money at risk, the deposits, that win situation they were looking for was going to be a break-even situation. So, people hold tight. Don't let the buyers and sellers tell you what the market's going to do. The market's going to do what it's going to do. And what you guys are sharing here is priceless, because we do have a strong economy. We don't have inventory, like Ruben was saying, for before all this took place. When was the last time we had a good inventory, a 6-month inventory? Years ago, 2-3 years ago?
Yeah.
I don't know if you guys keep track of that. So I wouldn't let people try to manipulate the time at hand. Some people are worried, and I understand it, but the people that are trying to take advantage to see if they can come out of this a little bit nicer at the end, it's not going to happen. I really don't believe that, and I think that's what you're emphasizing here, Ernesto.
Yeah, I don't see, if you think about it, the correction, what led to the price erosion in 2009, 2010 was the inventory increase. There was a big inventory increase. At that moment, lenders didn't have that much liquidity, so loans were not that readily available. We're going into this in a very healthy economy with lenders with money in their pockets and investors looking to buy loans. So, like I said, I don't have a magic ball, but if you're expecting a foreclosure wave by July, that's not going to happen.
And Ruben, I mean, a lot of the people listening to this weren't around back then. They don't know about 125% loan, right?
That's right. And those did exist back in the day. Absolutely.
125% loan, guys. They would go out. First of all, they would refinance their property and cash out with the incredible increases that we were having. And then they were buying second properties with almost no money down. So they would go out and buy 2 or 3 properties and then hope that the next guy was going to be crazy enough to buy them on an increased price. And then everybody got caught with 4 properties and no equity, and then negative equity, or lost, no equity at all. So that's what took place back then. And the people that are around now aren't going to see that all the market changes that took place were to protect us somewhat from some of those things happening again.
Yeah, for something, so something like now. Ruben, two people are asking, what are rates today on a purchase and on a refi?
So the rates are still very good. They did uptick a little bit from where they were about a week and a half ago. Obviously, person's credit score, type of property, et cetera, come into play. But the reality is that they're good. If they can save money by refinancing, they should call their mortgage company, should call us, and we'll take it from there. As far as giving you a specific number, they're changing constantly. Yesterday, we had 3 price changes in the day. Typically, we don't have 3 price changes in a week. So I'm not going to just sit out here and give them a number, but they're excellent. You know, they did uptick a little bit from where they were a week and a half ago, but it's a great take.
Are we below 4?
We can be below 4 depending on the property, yeah.
Depending on the property, okay.
Yeah, and the credit score.
I want to throw something at you guys for the audience. Because one of the questions that comes up, we have our old customers calling us and saying, hey, should I refinance now with all these great rates? Ruben, I want you to, if you can, give an answer to that, how you would ask. I mean, I know how I do it. What were the questions that you would ask so that you can determine whether they should or shouldn't? And Ernesto, how do you turn that into an opportunity for a customer?
You know, I think it's a great opportunity for a customer. The first thing we want to know is how long are you going to be in the house? That's the most important question. It's not about the rate. You know, that's where people get a little bit, you know, too much into watching, you know, CNBC and asking questions what a 10-year bond is. I take this back to a very elementary thing that we still put people in houses. And the first question we need to ask is Mr. and Mrs. Smith, for lack of a better last name.
Garcia,
there we go, Mr. and Mrs. Garcia. Is how long are you going to be here? Are you planning on moving? Are you planning on having children? Are you downsizing? And if they're planning on being there, whatever it is, 5, 10 years, then you work backwards and see if the cost of refinancing makes sense. If they're going to be moving to California in 1 year, it makes no sense to refinance, right? But if they're going to be in their house, you know, possibly 5, 7 years, and if they're saving a few $100s a month, it's worth it. It's no question, it's worth it. They're going to save 2 months right now, which I'm sure beyond the forbearance will help them. But again, it's just numbers and having that conversation. Now, if you as a realtor have that conversation with them, they say, hey, you know, we're looking to move in a year. Well, boy, that's somebody who may be a listing for you pretty soon, right, Ernesto?
Yeah, definitely.
So jumping on what you said, Ruben, real quick. Sorry, Ernesto. I usually would have them contact a lender so they can get the numbers, but basically whatever it costs them to refinance divided by their monthly savings is the amount of time where they break even for doing a refi.
Correct.
And then you ask them, what are you going to do in that time frame? Are you going to move? If it's 2.5 years to break even point, are you going to be doing something in 2.5 years that you can think of where you'll be out?
Right. It's that simple. You just do the math. How much you're going to save a month and how long will it take you to make up the cost of refinancing that loan?
So now I'm going to go back to some of the questions and then I'll come back. So question number 1 is, are appraisals still taking place? Yes, appraisals still taking place. The ones that they're going to do virtual appraisals or desktop appraisals is in a selected number of loans. They're going to evaluate the property and the buyers to evaluate the risk. So if somebody says, well, someone just commented, I'm still doing appraisals. Of course you're still doing appraisals, because they relax the guidelines. They didn't make it a new guideline. They just relaxed the guideline based on what their determination is, based on a property and based on you know, if they have apparel buyers, Coral Gables, 50% down payment, both employed in the same industry for 10 years, 820 credit score, you know, that one more than likely is not going to get a full appraisal. They're going to go ahead and just look at underwriting. So no, appraisals have not disappeared. They haven't gone away. They're giving CMG the decision to say, hey, I want to do an appraisal, full appraisal on this one, or we're comfortable with a desktop appraisal. Another question was regarding the stopping of foreclosures and evictions. Those are on Fannie and Freddie loans so far. They're asking all lenders to do that, and I think they're probably going to, right, Ruben? But they're
Yeah,
asking for a pause.
yeah, and this is on things that are already in the process. This is not on new things. For the new stuff that may happen now, the forbearance agreement is the option. This is on foreclosures and de minimis filings already that, I'm sorry, not de minimis, list pending filings already that they're just putting a hold to. So that's what they're talking about. It's not on something new.
Okay, and then one of the comments was, so if they're relaxing the guidelines and appraisals, are we going to have a financial crash because nothing is going to be assessed? No. They're not waiving appraisals. They're going to, in a case by case, determining on the equity on the property. Look at it this way. Hard money lenders don't look at a property. They look at the equity and they look at you. So they literally are taking the hard money lender approach. They're going to look at the client. They're going to look at the down payment. They're going to look at the property. And if they determine that it meets their guidelines, they're not going to appraise. So it's not that, FHA 3% down, they're going to say, yeah, forget about it. 2 or 3 Ks, yeah, don't worry about it. No appraisal needed. So,
right. And just so you guys know, even before the situation, that we're dealing with now, we were already starting to get appraisal waivers on certain files, regardless of this. So this is somewhere like Joaquin mentioned that we were going to get to eventually with technology, quite simply.
Good. One of the questions, and I'm going to get both of you to jump in on this one is, what kind of marketing should I be doing right now? What should I be telling them about the value of their home, or or talk about incentives or programs? My take right now for this next 15 days, any kind of marketing should be more than a automatic drip, unless you're going to customize it. You got to go personal. People are concerned. People are afraid. So sending someone, this is what your house is worth. I don't think it will work right now. I think there's a lot of good information that you can share with your customers that you have with your pipeline. Like I said, you got to double down on your leads. From programs available, from grants available. Positive information is for the next 15 days what I will be doing. Once we're out of the storm and things get back to normal, then yes, evaluate what the customer is, and at that moment, go down that route. But I don't think, sending an email saying, hey, market may contract, it's time to sell now, this is what the values are right now, this is how many properties have price reductions in the past 3 days, what are you waiting for? I don't think that play on that fear is going to work, but I'll let both of you, jump in on that one.
I'll just say this, this is to me what you should be doing right now is using your phone, because you have a captive audience. When also you're going to have people say, I can't talk to you because I'm at work. Well, now they're working from home. They have a lot more time. They're probably bored, and they probably need some kind of distraction, not to have to watch the news all the time. Now you have the most captive audience you can have. So if you have people that are in your pipeline, if you have customers that you want to contact, now is the time for a text or for a phone call, because they're sitting there. If you call at 10 a.m., they're working. If you call them at 6 p.m. while they're dealing with the kids, it's always an excuse not to talk to you. But the excuses are not there right now. At least it's not as much as they used to be. So for me, grassroots, pick up the phone, say hello, ask them how they're doing, how you can help. And by the way, how's this treating you as far as your living situation? To me, it's that simple.
That's probably the best advice that you can give anybody right now, is to use your phone and make contact. It's true. Nobody can say they're at work for the most part. The drip campaign about telling people what their value is, that should be ongoing background stuff. So you're absolutely right. But right now, just from this conversation that we've had, you have 3 opportunities to send out an email from inside your KV Core to all your contacts. And if you're not using KV Core like that, which would make me very sad, you could do it straight from your email. But you have 3 topics that you could have picked up today. 1, how do you do a forbearance, or how do you ask your mortgage company to stop billing you for now, right? You can say this is what you need to do today to not pay your mortgage, because some people might just sit around and wait for it to happen by itself. and that, Ruben gave us that warning. You had, should I refinance? Yes or no? What a great email header. Should I refinance? And it's not from a lender, it's from your agent. The market is strong. Send out a positive message. Do not put coronavirus update or something like that. People are tired of hearing that. But if you say market is strong, somebody might open that and you tell them, listen, inventory was still low. People have learned lessons from the past. The banks have learned lessons. The response has been great by the realtors and lenders of America, the appraisers. Everybody's trying to make sure that the market comes out strong. And then, of course, hopefully we'll talk about what they should be doing other than that to be marketing.
Good. Okay, so I got two questions. I'm going to jump in and you guys can contribute if you want. So one of them is, someone got a reoccupancy agreement for Miami Gardens. Miami Gardens, since 2010, all sales require a reoccupancy agreement. If they asked you for the pictures, it means they don't want to send the inspector out. That works in your benefit tremendously, trust me, so that's a plus. Same question again, where are we with interest rates? Guys, it's below 4, but it depends on the client, but we are currently threading below 4. A question I got out of the U.S. investors, and I love this one, panicking about investing in the U.S. The reason our bond just went negative is because the entire planet is bringing their cash to the U.S. The entire planet is bringing their cash to the U.S. So whatever investor tell you, I'm panicking about the U.S., ask them about their currency right now. This question comes from someone in Colombia. I think Colombia had 1,000 pesos devaluation in the past 15 days. Our dollars has gotten stronger in the past 15 days, while the Colombian peso, so if he had $1 million pesos in the bank, now he has 990. So his peso is losing money. Investments in South Florida, for anybody that wants to be an investor, is based on rate of return. Based on rate of return. And what rate of return will be sufficient for you to lock your money, right? Commercial real estate right now is still in South Florida between a 4 and a 6 return. I think that right now, with everything that has happened in the stock market, that is a beautiful number. Any investment that you make that you get a 5% return because of rental properties, it's going to be huge. So whoever's an out of the country investor, send me a message if you're one of our Canvas agents. And if you're not a Canvas agent, I'll be happy to have a conversation with them and ease their fears. But I think this is the solid house in the neighborhood, and everybody should be looking at our house as a solid house in the neighborhood.
So that makes us the 3 little piggies, and we're talking about the brick house, no?
Something like that. Something like that. Another thing I wanted to touch on, because it was asked of me, and I
would like to revisit the interest rate thing.
Yeah, everybody's asking about the interest rate, guys.
Yeah,
look, if it's a first-time buyer or a second-time buyer, look whether you're living and what are your rental expenses. If your rental expense is more than paying down a mortgage and taking advantage of all of the tax benefits of being a homeowner, makes no sense. That the conversation should go away from what is your interest rate to, okay, so what are you paying right now? Okay, I rent a 3.2 in Doral, and I pay $2,800 a month. Wow, $2,800 a month. At the top of my head, Ruben, that's about a $350,000, $370,000 mortgage, right?
More or less, yeah.
So plus you don't have any of the benefits of the write-offs of the interest rate. You don't have the write-offs of the first year and all your expenses on buying the house. So if you're paying $2,800 a month in rent, forget about the interest rate. Look at all the benefits of ownership. So I was asked with this issue with all hotels and restaurants being shut down temporarily, how is it going to affect the housing? So I did a little research in a couple of websites, and 73% of all service industry workers in South Florida are renters. You guys listening to me? 73% of all employees in the service industry are renters. They're not homeowners, right? So It's horrible that they're currently unemployed, horrible, but that is not going to affect house sales because they don't own a home. You know, they're gonna either group together and rent something else, or maybe move in with family temporarily. So there's a lot of stuff that's gonna happen. Yes, what that's gonna do is it's gonna bring a new inventory of rentals into the market. So you might want to be farming some out-of-state owners through IMAP, and maybe Joaquin we can put a class together on that. But it's not gonna affect sales that way. It's gonna bring in new and probably more affordable rental inventory. And Leo says, if you rent, you pay 100% interest. Leo, that's my tagline, my friend. I have that copywritten. What are you doing to me? That's that. But he's 100% true. If you're paying interest, if you're renting, 100% of what you're paying is interest rate. Guys, and closing, because we've been rambling on for a long time. Anything you want to add? Any positive, or not even positive, any reality that you want to share with close to 150 people that are watching us right now?
We should keep going. We're here all day, man. Listen, a quick thing, and I want Ruben to finish what I start here. But when somebody approaches me and asks me what the interest rates are, it's nice to have an answer to spit out. But I'm always going into discovery mode. I want to know why they asked me the question. If they're asking me because they're thinking of buying, refinance, I want to know why. I don't want to just spit back an answer like, oh, you can get it under 4%. I want Ruben to answer that question for them once I know what their motive is. And I think as realtors, we have to start thinking more as salespeople, which I know sometimes has a negative intonation to it, but it's actually you're in the service industry. So you need to offer solutions by knowing what their issue is. And once you know that they need a loan, then you put them over to CMG and let them continue with them. But you need to know whenever someone asks you any questions, you can walk around and check bankrate.com every morning and know the interest rate, but that's not going to help your career. Your career is going to be improved when you find out why they want to know what the interest rate is, and then you can offer a solution.
So someone just proposed a new class for us, and I'm probably gonna put that for next week, is how to invest in a changing market. I'll do some research on that, and I'll probably put together a smaller webinar just to touch on that. As we're sitting here, I got a text from Carolyn McNamanus, who runs Stewart Title, the state of Florida, and she's watching us. So thank you, Carolyn, for tuning in. I know you're super busy. And she says that as of today, the cancellation rates in South Florida for orders to Stewart Title is 10%, which is normal for South Florida. It's between 7 and 10. So that I have heard from some people, oh my God, all deals are falling apart. That's not true. The deals that are being canceled are within the range. If you have a deal right now and your buyer or sellers are having second thoughts, if you're a Canvas agent, give me a call. If you're not a Canvas agent and you still need some help or guidance, give me a call. I don't want anything out of it, but I want to help you get through this because, for those that know me, this industry has been my livelihood my entire life, adult life, from the age of 21, and I expected to be this way until I hang my gloves. So I don't mind helping you if you're with another company because I want all of us to get through this. There is an end to this and a rainbow at the end of the rainstorm. So if you're having an issue with a client that wants to cancel, let us know, and one of the three of us will be more than happy to jump in. I do want you to know this is the time to lean into this market. You're sitting at home, you're listening to us right now. When you hang up right now, listen to Ruben, take out that phone, that marketing making machine, go through the entire database, call everybody, ask them how they're doing, what they're doing, if you can help them in any way. And if they ask you for anything specific and you don't know about, send us a message and we'll help you. But this is the time to lean into the market. If you sit on the couch watching Netflix for the next 15 days, you're gonna be in a lot of pain when this is over. This is not the time. This is the time to get up, have a morning routine, work out, meditation, prayer, whatever you want to do in the morning, and then get to work. You know, lock yourself in a room in the house. If you don't have a room in the house, go sit in the backyard, sit in the balcony, sit in a closet. But you gotta get to work. And when you finish talking to every contact in your database, in your phone, go to all the leads that you have received over the past year and just pick up the phone and have a conversation. They'll be glad that somebody's calling them, because there's a lot of people freaking out, and you will be that voice or reason, you know? From this, I'm jumping into another call that someone is doing regarding sphere of influence that I want to hear, because I think the sphere of influence is something that at this moment you need to embrace. So remember, this is the time to lean onto this market. This is not the time to sit in the couch eating croquetas and watching Netflix. This is not the moment. The next 15 days are going to determine how you provide for yourself or your family the balance of 2020. Those are my closing comments. I want both of you to come up with something, and then we're going to wrap this up.
Go, Ruben.
Well, I'm not eating croquetas right now, but I did just get a box of pastelitos.
Yeah, who has croquetas?
But hey, like we've been talking all along, you know, this is a time to really, you know, get back to basics. Know what your job is, which is to put people in homes. We're here to help. The market is not crashing as far as the liquidity in our business. So call us. If you have any questions, you know, whether it's me or whoever your assigned LO is, and have a conversation. It's a good time for that too. You can even do a little Skype call and have coffee together through Skype. But we're here to help. Call us anytime or with any questions you may have.
We're talking about attacking the market and finding prospects. To all of those out there who are still in their fledgling state, just starting in the business, you need to learn the contract, read the contract, understand the contract, create a listing, even if you don't submit it, so you understand the MLS. Refine you. You need to make yourself a better agent. Take the opportunity now so that you can answer questions when you're asked. And that's my 2 cents.
Good. And for all those seasoned agents listening to us, who better than, and I sent this to Joaquin on Saturday, I think I met his day, who better than a realtor knows how to live from paycheck every 45 days? No other industry, right? No other industry knows how to live from paycheck every 45 days to paycheck, so you know how to stretch it and be effective. So right now, work, you know, reach out to your pipeline, reach out to your old leads, stay focused, stay positive. Do not spend the entire day watching the news. I'm not telling you not to watch the news, but do not spend your entire day watching the news. That's not what you should be doing right now. We will be doing a lot more of these. I'm going to work on that topic that somebody suggested. For the Canvas agents, we're going to do not this format. We're going to do a different format on Friday. It's going to be an open forum where we all can see each other and talk to each other. Let's see how that goes. But a couple of people have requested if we can do that so everybody can see everybody together. So that's going to be fun. I'll send you an invite to that, Ruben. I want to thank everybody for watching. It's been a pleasure sharing this time with you. There are better days ahead, and we'll see each other after this. Thank you for watching.
Goodbye, guys.
Bye-bye.